Hi, welcome into this Lendio review. Today, I'm going to show you how to get access to over millions in business funding, how to get access to over 10 types of different funding, as well as 75 plus different lenders to help you continue to build, grow, expand, and even get out of a tight pinch. I will also be answering the question on your mind. Is Lendio legit? And if so, are they worthy of your time? And so much more. My name is Michael from Viral Funding Solutions. And no further introduction, let's get right into this. We're looking at the homepage. It'll look like this more or less. Perhaps you've seen it. They tend to change their homepage from time to time, but this is what it's currently sitting at. Your one-stop shop for business lending, 10 plus types of funding options, 75 plus lenders, and countless opportunities, all from one simple application. Now, let me answer that question. Are they legit? Yes. However, it doesn't necessarily mean they are the best place to go seek funding. And stick with me because I'm going to be getting into why that is and why you don't want to be wasting any more time and making costly mistakes. So make sure you continue to watch. Now, what they're mostly known for are their term loan solutions ranging from 1 to 2 plus 1 to 5 plus years. They can get you merchant cash advances that are about that range and less. For the most part, usually you see merchant cash advances under 12 months. In a lot of cases, they can get you a business line of credit, also SBA funding, but stick with me. This may not be the best place to go to. Now, I'm going to get into some of those funding options in a moment, but let's go through this homepage. How our marketplace works. You can apply in just 15 minutes, compare options from 75 plus lenders, get funded in as little as 24 hours. So what they are is an online marketplace. They are not a direct lender. They're kind of like, but not exactly like a brokerage, where if you go sign up, create an account with them, they'll give you access to your best funding option and options. But the thing that I dislike about how they do things is it's not very personalized and customized of an approach. They don't exactly take the time to really understand you and your industry, your exact needs. Sure, they may say, hey, let's call this number to get started, or here's some options, but they're not, I wouldn't say they're not knowledgeable. It's just not personalized and customized and broken down into numbers to give you a ballpark range of what you could qualify for before you go into an application. Actually getting the time to get to know you as a human being first and foremost, and are most up to date in the market, and giving you the best option, because that's not always what's given here. And I've seen it in a lot of cases. I've been through this myself, where you go and you receive an offer. You may not be happy with like the 6 to 7 months you were given, but the truth be it is, if you have a bad credit score, usually underneath the 600 FICO, you're given 4 to 6 months is usually a range, and you're given this like $200, $300, $400 plus payments, and you're expected to pay it off within 6 months, 7,000 or however much that is monthly. And that is not a bad thing. It just means it's on your perspective. It's related to your business. Are you using that money for growth and expansion? And if not, and if it's just solely being used for survival money, like I tell everybody that I mentor and I talk to, that if you're using survival money, that's what the idle loans were primarily used for, just for survival purposes. And there may have been a smaller percentage that was used for expansion and growth and other purposes. But if you're solely using those 6 months and you're saying, well, I have a high payment, the APRs are just too high, the interest rates or the rates of total payback, however it's calculated, then that's something you have to deeply look into yourself and say, well, don't compare it to the idle loans. Compare it over here and say, well, growth and expansion, yes, I'm going to make a profit. The benefit is greater than the repayment. I'm going to keep my business stable. I'm not in a cash flow insufficient situation, cash flow negative, I'm cash flow positive. And these are a lot of things you have to look at. That's why you don't always get the longest terms. That's something to consider. A better fundability profile, the more funding you'll get, the more terms, a better rate, et cetera. And I'll try to leave a video for that down below. But you have to be careful because they don't give you that. And if you'd like an alternative from somewhere, from someone who can actually help you, as myself, as a broker / agent who's helped out numerous business owners over my time in all types of industries get the funding they deservedly need. And deservedly, quote unquote, meaning I'm actually going to take the time to get to understand you as a human being, you on the business side of the equation, and see what you can actually qualify for. And what I say, here is this questionnaire. It's not an application, so it is very confidential between you and I. I'll leave this down below in the description for you to get started. But you simply fill out these funding details. You should get done in less than like 30 seconds if you have it here. And then a little bit about us, myself right here at Viral Funding Solutions as the owner. and how I've helped out so many different business owners of all walks of life, of all types of different funding services. And there are more than just these here. I just put a limited amount there. There are more on the website homepage and so forth. The key benefits, experience, how it works, submit a funding form for funding. Step 2, get pre-approved for funding. Step 3, get approved, then funded. So I have a lot of expertise when it comes to this, and I see what happens in the marketplace today, and it's most up to date and what I can help you achieve in your own business. So get funded in as little as 24 hours. That can depend. It can be a merchant cash advance, sometimes same day instant approval, not in all cases, through Lendio, as much as, again, 24 hours or more, 24 to 72 hours, depends on the type of service you are getting. And then you can click the apply button now. Fueling the American dream, $12 billion funded, 300,000 small business loans, 75 plus lenders in the US. Now, if you're looking for non-US, maybe Canada, Puerto Rico, I'll try to leave some options for you down below in the description. Don't worry about that. We'll help you get the right loan overview. They have the line of credit, equipment financing, short-term loans, AR financing, check protection program, which PPP is not at the moment going on. And then we're going to view all in the second here. Apply online, a free 15-minute application that doesn't impact credit. And to me, 15 minutes isn't that long at all. You can cut that short and get it done in less than like 5 minutes, 10 minutes, and so forth. Sometimes they're longer than 15 minutes, but that isn't so much of a knockdown. It's not that long. Usually most of it is online application, 100% of it. And so you can just get it done like that. Visit your local Lendio, tools and resources, bookkeeping, calculators, FAQs, and so forth. They have an excellent rating on Trustpilot, but I'd be very cautious about this as well, because a lot of it can be on the marketing side. A lot of it can be justified by people who have the best fundability profile, and they come through here and they say they haven't had a bad experience. But those who don't have a good credit score, those that don't have the revenue, maybe you do have the revenue, just a bad credit score, or a good credit score, bad revenue, the time in business, et cetera, bank statements, when we all look at this stuff, which I do myself, then it paints a different picture. And you have to be careful, because I've seen it so many times where people get maybe too high of an APR, excuse me, they get too much interest, they get too much of a rate, a total payback, as opposed to going elsewhere. So they don't always give you the best options. And so you have to be careful that somebody isn't loan sharking you, which doesn't always happen. I'm not going to say it does really, but what happens is you get these higher rates, and it's justified when you don't have a good profile. They're not the idle loans, they're not grants, etc. These are not just primarily used for survival money, but you have to be careful when you use Lendio. And that's why I don't usually recommend them. So they have startup business loans, SBA loans, business lines of credits, equipment financing, business term loans. Let me get into that one right now, and then I'll go through another one, then we'll close up shop. And at any point, let me know, have you received funding? Do you currently have a business loan / advance? What is it that you're exactly looking for? But everything in the description will be there for you to get started. Go fill out that questionnaire. That will be the fastest way to get a hold of me, because I can evaluate it. I will analyze, evaluate it, and give you a proper response back via email. Plus, it comes with the free 6-step pre-approval lending checklist to get you approved for funding much faster. So that way you have your profile ready to go, which not a lot of people share with you. It's not scammy type of information. It's the most up-to-date, what you're going to see, and it's always being updated in case the market changes. And again, with my expertise to help you, I'll be there every step of the way. Loan amounts from $5,000 to $2 million. Loan terms from 1 to 5, as I was saying earlier, 1 to 2, 1 to 5 years. And time to fund in as little as 24 hours. Sometimes it can take longer, as much as a week. They don't really show you that. It's just a marketing perspective, right? Interest rates as low as 6%. They can go up to 6%, as much as 30%. SBA funds 5 to 7%, and so forth, 6 to 18%. Lines of credits, but more than 18% if it's not a banking solution. The classic small business loan, and explore small business loan options from these lenders. And some of these are actually really good lenders, but other ones, they just don't work as well. And it's not always like you will get the best offer through Lendio, or you won't always get the best benefits. So I recommend going the alternative route. And that's why this questionnaire is down there for you, so I can show you what the best programs are and the best benefits of going through them, how you can use them, how to apply, what will lenders use to qualify you for a business term loan, your credit score, time and business, collateral, profit and loss, or bank statements to show your revenue. Once you're approved, you can access your funds in as low as 24 hours. So a lot of the times with these 1 to 5 year term loans, you will have to be asked for profit and loss, depending on the amount you're getting, usually over 100, 150, 200,000 in some cases, even more, 300,000 and above. So it just depends on how much you're getting access to. Enjoy predictable payments. A business term typically comes with fixed interest rates or a flat fee, so you don't have to worry about the variables interest. That means your payments will stay constant over the lifetime of your loan term. 1 to 5 years. These terms enable you to easily calculate how much financing your business can afford to ensure you keep up with monthly payments until the loan is repaid. So it can be paid back weekly, monthly, a lot of cases bi-monthly. 6 to 30% in interest. That is putting it cautiously. Usually most people don't get on the 6% side. It's usually on the higher 30% or in the middle and above. And then sometimes you see these unsecured term loans that can go from 25 to 40%, 25 to 50%. It just depends on your risk profile we have to look at. And so there's just a little bit of things people are saying there, as you can see. And then let's go through another one to show you, and then I'll kind of show you the process. So the merchant cash advance, this is one where you can get much faster funding. There are programs out there where you can get same-day instant approval. I wouldn't say that so much with Lendio. If you would like to learn that program with just 5,000 plus monthly bank revenue coming in with at least 6+ months in business, you have, what was that, a 450, not so much a 450 FICO as much as it used to be, but 550 FICO, because lenders pull away from those lower credit profiles at that service because they end up in collections. There's a lot of complaints. A lot of people wanted to defer payments. It just doesn't work that way, especially with relationships built. It can happen, but it just normally does not. It's very rarely. So loan term up to 2 years, that's what it's stated as, but a lot of the times the merchant cash advance is normally from 4 to 11 months, in which you're going to see a lot of cases what most people end up getting. And it just says loan term up to 2 years because it can be somewhere between 4 to 24 months. But once you get to about 12 to 24 months, that's considered a shorter term loan. And that's why it's put that. It's another marketing perspective, right? Just have to be cautious of that. And so, yes, some people could get that, but to get up to 2 years, in a lot of cases, you see up to 18 months in this industry with the merchant cash advance, hybrid merchant cash advances. I strongly recommend you go for them, and they can be paid back on a daily, weekly, bi-weekly, or excuse me, not always bi-weekly, but hardly ever do you see monthly because they're causing too many defaults. And that's just a very common thing in the industry. I love these type of options if you are using it to fuel your business's growth and expansion, not so much primarily used for survival money. If you're already struggling with cash flow and your daily balances and your starting and ending bank balances, the amount of deposits is less per month, and the way you take payments just doesn't allow you to take these type of daily payments, weekly repayments. And there are a lot of people in that situation, but there are a lot of people who take advantage of this. I've just spoken to a lot of people recently who, hey, I have a restaurant, hey, I have a construction company, hey, I have a manufacturing, logistics, et cetera, trucking. And they go, I can handle the payments. I don't mind. I really need this to grow and expand. I'm hitting a hard season, or something's coming up where this is where we get our highest ROI. I really need the funding to get it in within this next month. But if you're looking for a longer term that doesn't produce exactly an ROI, these can work just fine for you. You may not qualify for something else. It just depends, again, on what you qualify for. And I can't stress that out enough because I'm not exhausted by it, but I see it every single day. I get people that come to me, literally in the hundreds plus, I'm not joking you, of different profiles, people who have millions per month, people who have just nothing, zero, they're just getting started, 5,000, 100,000, less than 100,000, et cetera. And they all qualify for something different. You may qualify for an SBA loan, but it doesn't necessarily mean it's the best solution for you. So make sure you fill out that questionnaire form down below and look for the other resources if you want to know where to go get started. What I recommend is my #1 recommendation. So time to funds as soon as 24 hours, interest rates as low as 18%. So the merchant cash advance service, yes, the rates you're considered to have more of a medium to high. So SBA idles, usually low, anywhere in the SBA 5 to 7%, sometimes 6 to 18%, depending on where you're going and how much you're getting. And so that's something to look out for. And that doesn't necessarily mean don't just look at the interest rate. Don't believe what other people told you or what you're hearing from them on YouTube or blog posts. They just haven't had enough experience with this, or they're not a broker/agent, so they don't really understand. They just had their own experience, and they were never given proper education like I give you on this channel. So when it's as low as 18%, it can go even as high as 100%. I've seen 90%, 100%, and there's a point where it can be called loan sharking. It can be called a hard money loan, but that has a wrong connotation. What you have to understand is each person is different. If you're using the money just to survive, if you're using this money to get you didn't go through the equipment financing, traditional leasing to own a truck or whatever that is, because you didn't qualify, or somebody just didn't give you enough information, and you're over here just like, oh, I got 4 trucks through them, I'll never do this again. Well, it's because you put yourself in a situation you shouldn't have been in, and that person didn't educate you well enough. So I take that off of their shoulders. It's not for you to get blamed on that. People didn't show you how to do it correctly. And so here it is. Some like On Deck is a great one. I've done a review on that. And I'll show you how to get access to other programs that are much better and higher quality that I recommend. Qualifying for one, usually 4 to 6 months. I'll show you one where you can get just with 3 months of bank statements, a voided check, and a copy of your driver's license. That's really pretty much it. A soft pull is a lot. That's what's required for it. Usually not a hard credit pull, and especially a lot of the time in the later stages. But I have another recommendation to go through with 3 months of bank statements. Very fast application process. You can get in and out. I just had a lady the other day doing well enough, over 300, 400,000 in monthly revenue on their lowest month, and the average 300,000 plus and above, getting approved for 600,000, but didn't end up getting an SBA loan because it's not something that they would have needed. It's probably not something that they would have qualified for, but they had a faster alternative. They got about 18 months and they had a 1.23 total payback. So the amount that they got, 600,000, but they didn't take that. They said, well, I don't want to supply extra documentation. That would have taken maybe an extra couple of days, as much as a week plus usually. And so they said, let me take the minimum of 150,000. That way I can take that first and then use it and then come back and receive another 150,000 or another 300,000 this time and supply documentation. But that's what a lot of people do. Don't get discouraged if you don't get the months you want with the amount of funding that's going to hurt your cash flow. You're never given something that you can't handle. And if the amount you get for the type of repayment, you're seeing a $200+ repayment, of $1,000, $2,000 plus per week repayment, 5,000 plus and above repayment per month, then looking at scaling back. Say if I got an offer of 25,000, perhaps we can do 20,000, we can do 16,000, and that's where we start from there. But don't ever close up just because you hear it from someone else. They don't educate you. So how a merchant cash advance works, usually it's based upon your receivables, your credit card receivables, debit card receivables, your day-to-day production of sales, the amount of deposits going into your account on a monthly basis, the daily balances. And so usually a percentage is taken away from your daily credit card receivables. So whatever you're making on a daily basis, whatever you're depositing, a certain percentage is taken away and given back to the lender over the duration of your term. And it can be fixed, it can be variable, it can sometimes fluctuate, it can be usually set, but it can be a little costly because one day you don't make anything, so don't take really as much. Let's say one day you get a $3,000 amount. So now they take out more from that. So now you're left with less. So that's how they usually work. And they're set on, instead of just calculating on interest rates, on a lot of the times you're calculating on factor rates or total paybacks, which is less confusing and it can in ways be less expensive if you're not paying in a longer term. Longer terms can just mean you have added interest going towards the interest instead of the principal. So that's something to be aware of that I speak to business owners on a daily basis, that just because you qualified for a 2+ year term loan, perhaps you're paying 25 to 40% in interest and so forth. Does that make sense? As opposed to you going over here and getting 12 months, maybe you're paying 8,000 a month, but you're going to pay it off in 12 months or less. And then you don't have extra debt to take on in the future. So can a startup get business advances? A lot of the times they don't qualify unless you're doing 5,000 a month. I have startup option videos down below. You can also go through the Lendio program. They do a good job at that. I will give them that. But I have alternatives and ways you can actually go through it much faster. So look for that video down below that I actually recommend you go through, that I covered in great detail. And maybe it'll be up here or somewhere, but maybe down below you can just get started. How it's repaid, and then what's given, amount of paperwork. When you're skipping out other types of funding, you don't have to go through all the paperwork. Credit pull, that's hard. Your business is precious collateral. So it's unsecured. You don't have to give up any kind of collateral, no hard credit checks, and in some cases, no interest rates for the most part in the merchant cash advance service. How to get the best rate. I kind of spoke about that earlier, but I won't get into it as much. You just have to have a better profile. And so they have equipment financing, business lines of credits, the short-term loan. Let me click there. I know we're going on for an extended amount of time, and feel free if you've seen what you've seen, go down below, but I'd stick around because I'm going to get into the SBA in a moment. And if you want to learn if you can get qualified for SBA funding that's not idle loan related, listen, the application is December 31st, 2021 was the deadline. There's a deferment going on for about 6 months. And if you're in the reconsideration, great. If not, I mean, there are other alternatives. Perhaps you got declined for reconsideration. You couldn't get an increase. You're still waiting. There are alternatives like I've just mentioned right now with these private lenders. So the term loan here from 1 to 3 years for the short term, 2,500 to 500,000, time to fund as soon as 24 hours, interest rates as low as 8%, but you can see as much as 30% plus in a lot of these cases because they are unsecured, not backed up by collateral. If you back them up by collateral, perhaps we can get you a lower rate, and that may still be high for you, but that's a bargain today, especially with home mortgages and everything above 10% and so forth. It's a bargain. When, you know, I heard another individual the other day what they were getting for a mortgage and 14%, and it's like, yeah, it's a bargain. And people are like, well, no, well, you got to think about inflation, the cost of the dollar. Do you have any assets? You should be getting assets to help you when time comes to getting funding, what you could qualify for. And so just a few things there. So similarly, in a way to the 1 to 5 year longer term, but you won't always qualify for those options. So I don't want you to just say, well, I'm going to go apply for that, and it doesn't work. So you can also purchase an existing business. Before I go into this, I would recommend you look for a video that I produced down below. I produced a couple of them on purchasing an existing business. Would I recommend going through the best possible options? Lendio can help for business acquisition, especially if you're a complete startup. If you're somebody who has no revenue, no time to business, no business experience, they may be the best place for you. But if you're somebody who has an existing business, perhaps you're not at the revenue yet, but you have this profile, you do have this experience, I have other options for you on that matter, as well as even if you don't have any kind of experience, I'll show you that video. So loan amounts for the business line of credit, this is where you can withdraw the funds and use them whenever you need to. Not like getting a lump sum, like a merchant cash advance, a term loan. You can take this and you'll say you get approved for 500,000. When they say that, usually a lot of the times anything over 250,000, you'll want to back it up with collateral. So anything usually underneath 250,000 is unsecured line of credit, or again, not backed up by an asset. We're talking about usually a high value real estate, commercial real estate property, other forms you have, but that's primarily, you have equipment to give up, accounts receivables, inventory, mutual stocks and bonds, and so forth. And that's usually what it's valued at. So time to funds, as soon as 1 to 2 weeks, loan term, 1 to 2 year maturity, interest rate as low as 8 to 24%. So yes, you can get longer terms. Usually you see 6, 9 to 12 months ranges in this space, but longer usually means you'll want to give up some type of collateral. You will also, if you don't, you have to have exceptional details to get financing with them. And then just some of the loan options from these lenders, yes, those are good and well known, but not necessarily, again, does it mean that those are the best. And they don't always do a good job of breaking it down for you of what your best option and options are. Even if you spoke with somebody, they don't exactly have the experience and say so a lot of the time as I do. Like I've received funding for my own businesses. You may look at a cabbage and a blue line, but over here you're like, oh, well, I got approved for more funding. Sure, the rates may be a little bit less over here, but the actual amount that I needed was there. And for the rate that I'm given, I actually prefer this. Or there's another scenario where we can get you better benefits, payment discounts, and so forth. It would benefit you. And how to qualify for one. Usually they say here 560 or higher. I mean, that's given it low. For the most part, it's 600. 560, again, it can be a marketing position in here where, hey, 560, if you have better revenue, if you have this time in business and so forth, your lender may ask you to make a personal guarantee, which is usually what is common. If you're looking for non-personal guarantee loans, I'll leave that down below, but do not rely on non-personal guarantee. Just about over 99% of it is. You just have to accept that. Lenders have to find a way to get their money back. And if they don't, they can secure a personal asset of yours, a car, etc. You know, homes at sometimes. And so they have to be able to be secure. And you have to understand at the end of the day that this can be, it's not inexpensive by any means. It's expensive and it can be very expensive. You just have to understand the use of it. If you don't understand what you're using that funding for, and you're going to end up always complaining about why this is too high. And it happens all the time. I see it every single day. And so that is that. And then let me get into the SBA loans. I actually have aside from this form here, I actually do have an SBA related, I have more videos down below. So that's what I would recommend you guys do. And then I have this SBA loan funding available quiz. It may look like this, it may look different over time, it may have changed it, but here you can get started and understand, hey, do I qualify? What is exactly the documentation, how it works, the qualifications of what I need to know to get started? And if I did qualify, where do I go? What is the best option for me to get the best benefits to help you personally on a business level? As well as if you don't qualify for this, it'll show you other options. And that's okay if you don't qualify for the SBA loans right now. There will be other ways, up to 5 million, usually with the SBA 7A, perhaps not the 504. Time to funds, 1 to 2 months, usually 1 to 3 months plus. I've seen a lot of people wait 6 months plus. And you don't want to be in that position. I understand that. Maybe you do. You're like, I can wait. Maybe I'm trying to purchase an existing business, but I waited 6 months, as opposed to I wanted it now. I wanted it in less than a month. Well, go the revenue-based loan / merchant cash advance. That's what I recommend. You also have personal loans. lines of credits if you qualify for that. Look down below in the description for all of it. So time to funds, loan terms 10 to 30 years. The more terms the longer you get with the SBA loan, usually that means a form of real estate. So most people will come to me and say, well, I have COVID relief. If it's COVID relief, it could possibly happen. A lot of times it just doesn't. It could be for working capital used for payroll, debt consolidation, but a lot of it should be used for fueling your growth and expansion, purchasing existing business, perhaps real estate, and et cetera. So you have to understand that the longer you go, that usually 30 years means for like some type of real estate funding. Up to 7 years, usually for working capital, up to 10 years in cases as well. And that's up to 350,000. In some cases, it could be more. And 10 years can be equipment financing and more. And traditional equipment financing is in leasing / leasing to own for 10 years and so forth. And then purchasing an existing business can be within 7 to 10 plus years, if not less. If not more than 10 years, depends on the business that you are acquiring and your fundability details. Interest rate, prime rates. So meet the SBA and so forth. What you need to know about those options, SBA 7A, express loans, and so forth, how it's paid back, how they're not forgiven, and so forth, how it goes on, and how you need 2 years of business tax returns, 2 years of personal tax returns, year-to-date in profit loss statement, year-to-date balance sheets, debt schedule, and so forth. So it's more of a process, and it can be very scrutinized if you don't qualify for this type of option. So that's on the table for you. Yes, it gives you a monthly payment with lower rates, longer terms, and the type of repayment monthly, but that doesn't necessarily mean that's what's best for you. And you shouldn't just base it off of that, and you may not even qualify for it. And if you do, there are other options on the table. So there are accounts receivable financing, invoices, unpaid invoices you can use as collateral, business acquisition loan, as I kind of spoke about, credit cards, and all that. If you want to learn how to build business credit the right way, I'll leave information down below in the description. Look for my free video series on building business credit, startup loans, my other recommendations outside of Lendio. So just to recap, actually, let's go through here. Bookkeeping software, Start a Simple Bookkeeping Solutions. It's not that bad at all to use. Gone through it. And then to start the application, this is what it'll look like, just so I can quickly show you, and we'll recap here. I've gone through all this, put it in an account. And something you have to be careful about is you may be getting call after call, or perhaps you're getting email after email, text, SMS drops, whatever it is, voicemail drops, however it's set up. They may say, hey, call this number to get started, which can happen. But I wouldn't want to go through all of that, especially if I'm getting hammered email after email. I close my account. That's the case with other programs that I won't mention in this video, but it starts with the words lending, and that's all I'm going to say. And I made a video review of that, and it's something you find out in nature with the second word. So I'll leave a link to that video down below. And that's not what I would recommend either. I'd recommend going through with this SBA quiz, the questionnaire to fill out, and my other options down below that actually will help you out the most possible. So basic info, owner info, business information, documents, and then you submit it. So again, less than 15 minutes or so, you can understand what your best option or your options are. Not necessarily are they the best, because you always have what's called bidders on these platforms. And when you go through bidders, they're usually trying to pay to show up on this popular Lendio platform, and they're not always the best lenders. And what people are telling you about how they work so well, and you will get, usually a lot of the times what people get are the higher rates as opposed to going elsewhere where it might be high, but it was not as high, and you get the better benefits. And you have to be careful about those reviews, because they're not always as accurate, and you're not going to get the best impression that way. So just to quickly recap, just understand that Lendio can come with a lot of good types of funding options. The loan calculator is something to utilize. It's just not as in-depth as you see in other places. It is an online marketplace, not a direct lender. They will pair you up with other lenders and show you where to go, but they don't break it down as well to you. They don't actually always show you an email where numbers are broken down, the qualifications, how it works. There's more behind the scenes in the underwriting process that you may not even know about, that they're keeping away from you. And then when you get an offer, you're like, well, I wasn't sure about that. They didn't tell me about it. Well, by myself, I'm going to show you all of that, especially in that questionnaire form that I have down below in the description. And just be careful about the reviews. They're not always as truthful. Don't believe what you see, and investigate it more thoroughly. I'd look for those 3-star more reviews, 2 stars. And they're not always as truthful either, but they will paint a more bigger picture and show you what's actually out there. And you don't want to be that person who ends up getting calls and ends up getting email after email, just trying to keep in touch. Maybe it's not about the same offer, but the way that they do it, the way that they say it, you're like almost another number to them. Like the insurance companies out there, you know, your car gets hit or whatever happens, they're just wanting to collect their money, and they're just wanting to drive up your interest and the insurance policies and everything that happens. And you're just like, wow, okay. I thought I was more than just a number to them. In a lot of cases, it isn't. With myself, you're not just a number. You're not that heavy at all. What you are is a human being on this side who has feelings, emotions like myself, who's been through all this, who's tried to get something best for themselves, to provide for their family, just to move forward in your own personal and business lives. You can stop stressing out about this, sitting on the couch. Just imagine getting business funding that actually matters to you, that it'll actually work in your best interest. So all of this will be down below in the description. You can actually check out my site as well, and so much more. And if you have any questions, comments, or concerns, please voice them for me down below. And if you have not subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. If you got value out of this, please give it a thumbs up. Share it with others who you feel will need this type of help as well. And again, everything will be down below in the description for you to get started. That is everything. Thank you.